Claire, thanks for joining us. What contributed to the big turnaround? Can you point to one or two things that support the reason that you've seen inflows in every quarter this year as opposed to outflows in every quarter last year?
Well, we're really pleased with our results for 2019. As you point out, we had very strong inflows in the fourth quarter, 13 billion and 26 billion for the full year. We've been very focused on what we're all about, which is investment performance and having a really broad and diversified offering across our products. And our fund performance has been really strong during 2019. And that has helped contribute to the strong net inflow result that we've seen in 2019. Coupled with that, I would say the diversification that we have across being able to offer alternatives funds, passive funds and actively managed funds enables our clients to really have a full suite of options when making investment choices. We have deep relationships with strategic partnerships, and those have also been contributing to our inflow targets that we've achieved in 2019. So really many aspects that have contributed to a solid result.
Claire, good morning to you. Let me ask you, in the wake of the big announcement we saw from BlackRock that caught a lot of media attention around sustainability, the world's biggest asset manager with a sustainability pledge, do you at DWS have a sustainability pledge?
ESG is really important to us at DWS, absolutely, and we have seen through 2019 that we have offered a number of new innovative products that have an ESG tilt towards them. So we have our own scoring system, we develop products that meet ESG criteria, and we will continue to do that and continue to grow the portion of our AUM which is ESG compliance. We are building a sustainability office in DWS that will report to the CEO to ensure that we really embed ESG into our DNA going forward. It's a really important part of our offering at DWS.
When you look at the trends, Claire, for investors now, when you look at the shooting stars, is there anything that stands out to you as bigger or even as big as ESG right now?
I think what's important to us as we look forward into 2020 is to continue doing what we've been doing for our clients, which is strong investment performance that can offer solutions to clients in any market environment, and particularly in the low yield environment that we see at the moment. We see very strong demand in our alternatives portfolio, and we've delivered 19 billion of inflows during 2019. We expect that to be a continued area of focus and a continued pipeline going into 2020 and beyond. So that's something that we're very focused on, in addition to providing a full suite across all of our active multi-asset and quant solutions that clients are looking for.
But it does feel as if you paint a picture there, Claire, of continuity, but it does feel as if certainly Davos was dominated by plenty of talk about sustainability and investors. A lot of talk with investors that we speak to about clients wanting more sustainable solutions. Do you sense that the industry is at a turning point or not?
I think it is at a turning point, absolutely, and I think client conversations are often incorporating ESG requirements and expectations, and there is an absolute desire to be able to offer those solutions in the past and going forward. But I think we definitely are at that turning point, and that's why we're looking very carefully at how we continue to really push our innovations in that direction and ensure that we can deliver a full range of products across our product suite that meet those requirements of our clients. So when we look back at 2019, a good portion of the new products that we put on our shelf are ESG compliant. We have started to incorporate that into our CIO research. We are developing a sustainability office so that sustainability topics will really be embedded through the DNA of the organisation and really infiltrate the decisions that we are taking.
If you get back to the business of your business, your boss, Asoka Verman, has said that growing through M&A is one of his personal goals. He said when he came into the job, and yet we haven't really seen any transformational M&A from DWS. Why do you think that is? And have you got your eye on anything?
I think we've been very focused on the organic growth and driving the excellent results that we saw last year with such a strong increase in profits. So we've been focusing on efficiency, on managing our costs, on bringing down our cost income ratio, on driving revenue growth, and on building on investment capability. And those are really the foundations of our business that we've been very, very focused on. M&A is absolutely a topic that we are open to. We will look at any opportunities that can enhance distribution capabilities or product offerings and help us to grow inorganically, but we're not in a hurry, and we will always make the right choices in that regard. We're very much focused on developing organic growth in our organisation.